Good morning. It's Saturday morning already. Would you believe another week has gone by? Property Avenue WA. This is what we're about. It focuses on Western Australian property and all things property. Now you're probably wondering, my little friend with grey-haired friend is not about. He's gone to Kalbarri. He's gone on a holiday. It's too much for him, so he's taken the family to Kalbarri for a week. But I am pleased to have Jordan Ralph from Mountway Finance. George, how are you, mate? Great to talk to you.
Yeah, good, thank you. Yeah.
George, would have been, I reckon you were our second guest. I think it was Oscar and then you. So in the first 3 or 4 episodes we had. And I thought with everything that's going on these last few months, and particularly currently since the COVID scenario in WA, I thought it'd be really good to get a perspective of what's happening in the Northwest. And obviously with your background in finance and your business, Mountway Finance, what an opportunity. I know it was last minute, mate, but great to have you on board. How are you going?
Yeah, pretty good. How are you going?
Yeah, been chaotic, been really busy, as we've discussed. But it's very interesting to see what's going on with the property world and obviously, in your case, the finance world, because that's the flow-on effect.
Yeah, exactly. And, particularly up here, I'm based in Perth, that's exactly what we're seeing. It's a bit chaotic. So we've gone from, I think when we chatted last time, it would have been not long after the shutdown. So we were talking early April or maybe late April, perhaps. Yep. And it was still fairly uncertain. Things hadn't really recovered yet. But since then, up here, it has been the busiest I've seen it for many years.
Yeah. Yep.
So, and it's interesting the timing of this discussion, because there was some information that came out from the Chamber of Commerce, the Western Australian Chamber of Commerce, just yesterday, which is kind of feeds into what we'll discuss today. So I'll let you know what that's all about.
Yeah, by all means. Yeah, and it has been. I mean, some of the commentary this week. Obviously, since we've been doing this show, we make a point of doing a bit more research than perhaps what we do in normal day to day, and that's been enjoyable. But mortgage deferrals is a topic that's come up this week, of course, because end of September, and the rental market has been certainly Oscar, which is an area that he specialises in and has a lot of information. Unfortunately, we don't have those stats this week because, as I said, our little buddy is on the road heading to Kalbarri. Good luck to him, I reckon. Join the thousands. But yeah, no, it's been very, very interesting in what's going on. And with what you've been observing up north, in Geraldton, we've been saying, and I don't know what the latest is, but last week the statistics for rental property was less than 80. That's units,
less than 80 properties in total.
In total for rent.
That's incredible.
Amazing. And Oscar, as Oscar explained, he's been involved in the property market and property management market in Geraldton. And he was around when the boom times were happening and never been that low. And last week we had Carly Brown, who's a property manager with Ray White in Geraldton, and she obviously wasn't able to give specifics as to her office is concerned, but certainly there are some suburbs of Geraldton, and we know the same as in Perth because it's been documented. There are some suburbs where there's nothing available. Some people just don't have stuff available. So your choice is limited as well.
That's right. There's two sides to the story there, I think. I mean, that is certainly the case. There's nothing available. And I'm just briefly going to sort of probably infringe on Oscar's territory here, but one of the challenges is, despite that low vacancy,
can I just interrupt, mate? Can I just interrupt? You're welcome to go into his territory because he's not here, so he's got no right to reply.
Yeah, no, fair enough. But as you've probably talked about already, there are still restrictions around what landlords can do with their tenants.
Yes.
With regards to raising rent in particular. Now, I believe that is coming off fairly soon. So that can change, but also with regards to being able to kick tenants out that are unsuitable and that kind of thing. So despite the very tight rental market, it's actually hard as a landlord to capitalise on that situation. But what, we've got a version of that happening in Karratha too. and there are really good reasons for it. Most particularly since Karratha has always had very expensive rent, a high proportion of corporate renters. And so if you're an individual in the market, you're competing with corporate renters to get your house. And so there's always been a high rent in Karratha. So even throughout the up and down property cycle here, people have been able to maintain a pretty good rental yield. And in particular in the last, we're talking 18 months, but accelerated since coronavirus with I think we had 75 points reduced at the Reserve Bank. The affordability of housing, taking on a mortgage versus paying rent, has never been more skewed in Karratha. So right. One of the reasons we're seeing a tight rental market is due to everyone buying up as owner-occupiers. And there's been a huge amount of activity in that space because it just makes economic sense to buy and pay a mortgage versus to pay almost double that in rent.
And that was something that I observed with clients probably 10 years ago when things were booming, admittedly paying perhaps much higher prices. But that was the situation where they had staff or they had businesses up there, and they decide, well, hang on, I'm better off to buy a property for $700,000, $800,000, $900,000 than I was to be paying $2,000 a week in rent.
Exactly. Hopefully we see a moderation of that, because that certainly happened 7 or 8 years ago. And those people were buying well in excess of what it would cost to replace the house. They were buying at very inflated prices. And they are unfortunately some of the people that have felt the most pain in 16, 17, 18, when banks were coming in and cleaning up, because they were in negative equity positions to a massive degree. Ideally, what's going on, I think the price points here, for example, for a 4x2 in Karratha are on about 600 or 700 square meters of land. You get that for around 500,000, and that's probably a bit more than you'd pay in Perth, but it's actually well less than what you would have paid about 8 or 9 years ago here. So it makes economic sense from the purchase price, also the interest rate. And hopefully we don't have this situation where if there is a dip in the market again down the track, people are in massive negative equity positions. So hopefully it's a healthier cycle.
George, while we're talking about that, one thing that's been really just go on the road, just travel between Geraldton and Perth, just go while in Geraldton, just have a look at the traffic on the main highway with caravans and trailers. Is that obviously people can't travel overseas, people can't travel interstate, so we're identifying the north, and no doubt it's the same in the south. Is that having an impact as well on the rental market as far as the travellers and tourists are concerned?
I think so, particularly in places that are known for tourism. So Exmouth, Broome, Kalbarri potentially. I haven't been down there recently though. I think there's a lot of money that would have been spent on overseas holidays, or you know, on things that you can't really spend money on right now. And it's being put into caravans, domestic holidays. And even I think there are certain lucky individuals that have some money that they're looking to do something with, that might have previously gone on the share market. Perhaps that's too risky at the moment. So places like Exmouth, I believe the tourism will also spark a reinterest in the property market there. Because people will go there, they'll like it, they'll think we'll buy a holiday home here, or we'll actually relocate here. And for once in many years, Exmouth prices are rising, and that's pretty interesting because that's always been a very steady market. It hasn't really dropped, it hasn't really increased for a long time.
So getting back to that with regard to your profession, you're a finance broker. You've got your own business, Mountway Finance, as we've raised before.
Yep.
What are you seeing as far as the lending side is concerned? What is that? Are you getting, what sort of people are coming to see you? Are we having people? I mean, there's a number of situations that are going at the moment, but where's that leading with regard to finance and what people are seeing you about?
Yeah, look, so I do home and business finance, and I'm getting a lot of business finance inquiries for starters, which is a good indication because businesses employ people, employed people have money to spend in the economy, that kind of thing. But so they're looking to buy equipment, and many of them are looking to buy premises that they are previously renting. So not dissimilar to
Really?
the housing, yeah, the housing market. That's right. That's in Karratha particularly.
Yep.
But in the housing market, that is definitely going on to a greater extent, where people want to own their house more than rent ever before, and it is a little challenging in some ways because this is coming from across the spectrum of the type of borrower you could be dealing with. So look, we're talking first-home buyers, we're talking people who have perhaps not planned very well financially, but all of a sudden they realise that they've got to do something, and they come fairly unprepared, to be honest, with low deposits and sort of carrying a swathe of personal debts that they might have had, buying boats and cars and things like that when they weren't thinking as carefully about their financial moves, all the way through to the fairly astute property investors who know that if they buy a property in the Northwest right now, it will be positively geared and they'll be making money even after paying principal and interest.
Yeah.
So right across that spectrum, there's interest.
Yeah.
Now, one thing that hasn't really changed is the bank's policy and appetite with regards to the Northwest. And that means it's challenging because the most astute property investors are in with a fairly good chance. The first-home buyers have a bunch of help, government grants and things like that, which is fantastic. So they are usually okay. And then the people in between who have, I would say just probably not been educated very well about how to make the best financial moves, they are often finding it very, very difficult. And I'll give you an example. If you take one of these borrowers, there's usually a non-bank or low-doc lender who can do the same deal in Perth, no problems. But if you do it in the Northwest, those lenders aren't here. They don't want to be in Karratha. They don't want to be in Port Hedland.
Right.
Yeah. So, and one business development manager from one of these non-bank lenders gave it to me pretty simply. Their model is they'll take a risk on the borrower, but they won't take a risk on the security. So you can have someone with checkered credit who is living in Perth, and they can get a loan. But if it happens up here, it has to be blue ribbon borrower.
Right. So how do you get around that then? Because there's obviously opportunity up in the Northwest, as we just sort of made mention. Values are sort of are still in a good place. I mean, they dropped away incredibly a few years ago, and I know I've had clients in the settlement side of things where it's been pretty uncomfortable, and it's been a lot of work to get those settlements to the point of settlement because of the bank's involvement. Where's that? How do you get around that now with regard to what you're describing and some of the lenders?
Well, couple of ways. It depends on your circumstances. I'm going to bring up a couple of different situations that I've dealt with. One situation was really the only thing holding back this particular borrower from going with a major lender had to do with a default on their credit record from a few years ago, which was really just fairly stupid. They just kind of didn't answer their mail and forgot to pay a credit card and went on for months. Anyway, I recommended a credit repair lawyer, and I don't frequently go to credit repair lawyers, but I did some research into the ones that were good, and I had a chat to one, and I was sufficiently satisfied to recommend these people to my client. And it worked out quite well. These credit repair lawyers happen to have a relationship with the debt collectors who were actually involved here and who put the default on their credit record. So the default was paid. The debt was paid, but the default stuck on the record. So the credit repair lawyers were actually able to have a discussion, recognise that they were paid off in full and there was no problem. So they took that default off the record. And as a result, they were able to get their loan. Okay, so credit repair lawyers are actually very handy, particularly for people up here when you have that situation of banks not wanting to take a risk on the borrower and the security at the same time. And if you're up here, you've already got a risk on the security in the eyes of the bank. So you have to be a very good borrower. A couple of other situations, we've gotten the employer involved. It's very tight employment market up here at the moment. I mean, tight across WA. I mean, you can't get fruit pickers in the southwest because there's no. Yeah, that's right. And likewise, you can't get the eastern states workers over here doing FIFO that we used to have. So that small businesses and large are finding it hard to keep their employees. So if you've got good employees, there's a very big incentive to keep them. So we've involved the employees with things like, a loan that's paid off through their paycheck over a period of time, or a gift even, or some kind of bonus paid early that helps a marginal borrower come to the bank with a larger deposit. And that's really important because if you've got a 20% deposit, the bank looks at you less thoroughly. If you've got a 15% deposit, you're still all right, but you've got to pay extra fees. If you've got a 9%, 90% loan seems to be the threshold for most banks. So if you're borrowing more than 90%, then you get looked over 3 times. Every T is crossed, every I is dotted. So, if you're going for a property, if you're going for a purchase in Karratha, in Port Hedland, your best possible scenario is to try and get 10% of the purchase price.
Yep, mate. I'm pleased to know that our my co-host, who's going to Kalbarri, one Oscar de Souza, he sent us a little message. Morning, gents. He's going through a personal vehicle finance purchase at the moment, and in the past he's done that via commercial lending through his business. Yes, but he's saying it seems lenders are keen to lend to business more than civilians. Better interest rates, lower documentation. He's finding it frustrating. Why is that the case when it comes to those sort of situations?
Look, it might be that the government is really pushing for a business-led recovery.
I just think he needs a good finance broker.
That's right. Come talk to me. Vehicle finance has always been it's been in the crosshairs since the Royal Commission. Because first of all, the process that vehicle lenders were going through was less stringent than home lending in the first place, and secondly, because potentially there were some lenders who were not really doing the right thing anyway. They were going after vulnerable people instead of saying, "Yeah, great big shiny new car, don't worry about it. All you pay is $1,000 a week, you'll be able to afford it." And they never disclose the interest rate, which is in double digits, that kind of thing. So that was going on. So I think there was a bit of a shake up of that industry in the last 12 months. Certainly their process has gotten more stringent. But perhaps it is, and I don't know for sure. I'm just speculating, but the federal government has talked about a business-led recovery right from the beginning. And for example, when they announced 280 billion worth of stimulus money, a huge proportion of that was in fact the Reserve Bank, which was going to pump money into the major banks, so the big four. And that money was designed to be on lent to small and medium businesses with a government guarantee or without a government guarantee, but at good rates. So basically they were able to fill up their books with money that cost them 0.25%, and they were to add their margin, as they usually do, and on lend that at something like 2.5% to 3.5%. And it was supposed to give businesses cheaper, easier credit to push on through the shutdown and to then get going again. Now, my suspicion is that hasn't picked up as fast as it should have, but it is now starting to pick up pace. We have now phase 2 of that small and medium enterprise government guarantee loan scheme, and they've broadened the horizons of that. It's from 250,000 up to $1 million. The rates are good. The qualifying criteria are more lenient. And look, I'll just put it out there that I'm speculating, but perhaps it has to do with where the focus is being put on the banks by the federal government to make it a business-led recovery. So lend to businesses, worry less about individuals.
Yep. Mate, getting back to the home building, he has responded. He said, Jordan, great explanation. So, mate, he's happy with you. He will now look for a good broker.
Excellent. Yeah, that's good.
Mate,
even on holidays.
Sorry?
Even on holidays, he's watching the podcast. That's excellent.
Yeah, I know. I'm impressed. That's a true co-host. And he's getting cheeky. TV hits the fairways less than what he thinks he does. There you go. Hey, I was really interested in your comment earlier on about a credit repair lawyer. Obviously, people that are wanting to buy property and wanting to get finance. So what's the story there? That's something that obviously would interest some people that may be able to assist them. As you say, not everybody. Some people have got a credit issue because it's just been poor management rather than not having the ability to repay. And one of the things I was going to make mention in my little topics today was not only about interest rates, but also I thought it was appropriate that perhaps we make mention about your household budget, seeing we're going to have our federal government budget announced shortly in the next couple of days. But with regard to a credit repair lawyer, so what's that entail? Is that something that the broker will organise, or is that something if I've got a problem with my credit and I want to borrow money and it's going to impact on my loan, what does the client do there?
Yeah, look, either one can organise it. It doesn't matter which, and it comes with a fee, right? And it's usually a fixed fee per default. But defaults aren't just the only issue, right? We have this thing now called comprehensive credit reporting, and it tracks each and every repayment on each and every facility that you have. So in terms of your overall credit rating, you have the things that are important that people have always known about. So if you have lots of inquiries from unsecured lenders and credit card providers over a short period of time, that indicates that you've maybe gotten into some strife financially, or you haven't really managed affairs very well, and that's a bad situation. So one or two inquiries in a year, and that's fine. But if you're the type of person who's switching credit cards every 3 months, just be careful of that. Stop that if you can, because that's going to reflect badly. And that includes car loans, personal loans, that kind of thing. So the frequency of credit inquiries on your record has an impact, and you can't really stop that. A credit repair lawyer can't do anything about that. Default is when you miss repayments, and frequently what happens is you get some rope. Usually I think it's about 3 repayments, depends on the lender, and if you miss them after the 3rd repayment, they can do a few things. They can do enforcement action in the bank, or they can send it to a debt collector, basically. And the debt collectors, the reason why they take it on is because essentially what they do is they buy the debt off the bank at a discount because they expect to recover a fraction of what's owing, and they're set up specifically for enforcement. So they go in pretty hard. Once you go to debt collectors, they will definitely put a default on your record, and they will definitely follow you up pretty hard for that debt. So, but now we have comprehensive credit reporting as well. And what that entails is if you have a credit card and you have a monthly repayment, your credit record will say, Westpac credit card, and it'll have 1 representing each month that you've actually made your payment, and a 0 for the month that you haven't made the repayment. And the amount of zeros you have on your record, whether they've been cleared ultimately and not led to a default, will reflect on your credit record. That's also something.
Right. Yep.
Yeah, that's right. It goes to an overall score.
Yep.
And now that's something which a credit repair lawyer also can't really do much about. However, they can in certain circumstances, and it usually comes down to utility providers, because that also shows up on comprehensive credit reporting.
Yeah.
Utility providers frequently mail their bills, and frequently mail is lost or missed or whatever.
Yep.
Or you go on holidays and something comes in and it's overdue, and they can do things about that where there's really good reasoning and you can show why something was missed, and you remedy the situation, obviously. But where they mostly can assist is with the defaults that were ultimately satisfied. So you've for whatever reason you got in a tight spot, you did some silly things. No one's perfect, but you remedied the situation, you paid it back, but you still have the default on the record. Certain debt collectors and indeed certain banks are happy enough, once they talk to a credit repair lawyer, to have that removed. This is, of course, something that people can do themselves as well, but I guess credit repair lawyers speak a certain language, and they know the arguments that work when they go and they talk.
And it's like a lot of things, Jordan. I mean, you go to a settlement agent or someone who's sort of involved in the property side who can help you, and I refer to myself in that, but they can help you with that. We go to someone like yourself, be a finance broker who specialises in the field of finance and has an understanding of that. I mean, as we say all along, it's really important to, certainly there's people that try to sell their house privately and all those sort of things, but there are, even doing that, you still need to ensure that you've got someone around you to provide that direction, because it helps the cause, rather than coming back after you've tried to do it all yourself on your own without getting proper advice, and then asking someone to clean up the mess. It becomes a more costly exercise and a little bit harder to solve.
That's right. So look, I'd recommend that anyone looking to do anything in whenever they're applying for finance, I think credit cards seem to be less stringent, but certainly home finance, you're entitled to a free copy of your credit record, and I can send you a link that you can send out to your listeners.
That'd be great.
And it'll take you to a credit rating agency. As long as you prove that you are you, they'll give you a copy of that credit report. And I believe you can get 3 per annum for free. After that, you have to pay. It's worthwhile having a look. And in particularly, what you're looking for are defaults. They're the ones that are going to stop you getting a loan. All the other things I discussed, like the frequency of inquiries from lenders and the zeros that appear as missed repayments, they don't help your score. Your score is affected by that. But certainly there seems to be a threshold of many lenders where if there's a default, they don't want to deal with you.
Yep. Mate, well, I'll definitely take you up on that. I've just put a little thing on here that we'll ensure that we get that link, and we'll put our we'll put that link on our Property Avenue WA Facebook page, and certainly promote that a bit, because I'm sure I've certainly had people inquiring about things like that. So that'll be really helpful if you can send us that. Mate, the other thing that I was going to ask you, Jordan, is the day was sort of quite busy yesterday. I know you and I started talking on the phone, and then suddenly we both had to go in different directions, and the plan was to get back to each other, and we didn't do that.
No.
Although I might add, I did eventually get to see 3 of my grandchildren, which was pretty special. And we had lots of fun and lots of cheering for the football. I might add, none of us barracked for the teams that were playing last night, but it was still a lot of enthusiasm, so it was good fun. But, mate, the other thing that so when I got home, I started doing doing my homework, and I noticed the federal government's extended the first home buyer scheme, which is this scheme was they're adding an additional 10,000 places to a scheme designed to make it easier for first home buyers to purchase a house with a small deposit, which you were saying earlier on about 90%, and if you've got 10% deposit, 20% deposit. But again, this scheme, when you read through it, it's not just for first home buyers. It's restricted to the point of it commences October 6th, and it's on the condition that those people are purchasing new builds. Is new builds something that's happening in up that way? Is that sort of a market that's going along like the rest of WA or the rest of Australia?
Yeah, absolutely. Before I answer, I'll just give you I've had a problem with my right eye this week. It's been I think something landed in it, and apology if I keep winking at you.
That's okay, mate.
It's not designed. I'm not trying to let you know something, but so
all good, mate. I'm pleased to hear. One thing we say, it's our program is informative and it's relaxed, and we have a few laughs, and that's a laugh. That's okay.
So yeah, don't take it as I'm saying one thing and I mean another thing. It seems to be giving me a bit of grief right now, but
that's okay. Appreciate it.
New builds in Karratha, absolutely. It has been a rush to the door on this one. It's been incredible. And two things: the federal government is providing money for renovations and new builds, and I believe that's $20,000. I just off the top of my head, I'm not sure. And the reason why I'm not sure is actually because it's means tested, and most of the people doing things up here aren't means, they don't fit into those means. I think your family income has to be less than 180,000, and people up here have the lovely benefit of being paid very well, mostly. So that portion, the federal government stuff, is means tested, and there's probably more people, I'd say, in Perth and your first home buyers down there who are in that category who can satisfy those means. But the state government one is much more easy. All you need to do is start a building contract before the 31st of December, and if you do, you get $20,000 towards that build. It's very attractive. So that, with the federal government money, can equal $40,000. And if you're a first home buyer, you still get the state government stamp duty exemption. So usually that's around a $20,000 saving. So now you're talking $60,000. And then in addition, in Karratha, we've had a whole bunch of vacant land which has been developed. There's roads, there's services, all that sort of stuff laid out there. It's in an area called Madigan, which is a vacant suburb next door to Bayton West. And nothing has happened there for 5 or 6 years. And the reason being is Development WA, which is the state government developer, they develop that land, and they have a benchmark return that they need to meet. So they develop the land. It cost them a certain amount of money, and because they're trying to meet their benchmark return, the price tag that they were asking for that land was too high. No one did anything for years. Now, as part of a state government stimulus, they've actually dropped that benchmark rate for Development WA in the northwest. It's not statewide, unfortunately, in the northwest. And so when you take the decrease in land value for those estates with the potential federal government money, the definite state government money, the first home buyer grant, if you're a first home buyer, for building, and the first home buyer stamp duty exemption if you're a first home buyer, all of that combined means there are a huge number of people who are going for these lots now. So to give you an idea, 20 lots were listed only a few weeks ago. 20 lots are now purchased with building contracts attached to them. So it's incredible. The response has been instant.
Yep. Well, certainly down here. In fact, there was an article during the week which made reference to the fact that the construction industry was trying to, I'm just trying to find it, they were trying to get an extension because they just can't fulfill. And there was another article, I think, on ABC, ABC News, I think it was, online, and they were making reference that they might be better off extending this, which may be announced in the federal government. That could be in the budget that they do this, but perhaps because of what's going on in the limited time frame, because once you sign your contract, I think you've got 3 months to start building to qualify for those grants. And so what they're saying is that they've been inundated. It's obviously people are buying the land. It finishes in December. We're now October. Doesn't give you much time if you haven't got the up and running. You've got limited time frame. So an extension would be obvious. And as they said, also extend the building industry rather than for want of a better term, a boom and bust. Like everything goes nuts for 6 months, but then what else happens after that? And particularly people that are building with the expectation of getting 45 grand to go towards their build.
Yeah, I agree. There's a few. There's another dimension to that too, I believe, which is that you've got builders who were sort of looking at not much going on. Now they've got lots going on, and they will get to a point where they start charging surge prices. Like they're so busy that at yet another inquiry, if they want them to start, within 3 months of Christmas, they will just basically add a bigger margin on. Their cost increases. Yep. And so the benefit of the grant to the end user, the buyer, will be diminished by those higher prices. So if they can extend out that building activity longer, then ideally you have a more sort of competitive, normalized market where the grant money doesn't simply go into the increased cost of building.
Yep.
So I think it would be a good thing. One thing that I think, again, more speculation. Let me just put it out there. I'm not like sort of more informed about government movements and anything, but my impression of what's going on with the federal government, with say JobKeeper in particular, never made a commitment that they will extend it out beyond 30th of September until they did. You know what I mean? Because I think what they're basically saying is we want to make sure that what we do is in line with what's happening, and if things are still hard, we will extend it again. That's my feeling. And so, with the building grant, I think they might do the same. That's sort of like, we're looking at it now. It seems to be working, but if we think it has more work to do, and it could still work to stimulate the economy, then we'll do it. Then we'll push it out further. Yeah.
But don't you think what I've been saying this before, and as have others, and certainly our representative body AICWA, we're sort of suggesting that, and I think the Real Estate Institute as well, suggesting, what about the established market? And certainly one of the areas that perhaps needs to be considered is and I refer to the metropolitan area perhaps as much as anywhere, but why not provide some sort of incentive and a first home buyer grant for buying established in the inner parts of, let's use Perth as an example, the obvious example, because this continual construction occurring wider and wider and wider has got to have an impact on values. And of course, the other part that I've sort of been discussing in previous commentaries of this nature is the over 60s, for example, who've got a 4x2 or whatever the case may be and want to downsize. An opportunity for son or grandchildren to buy grandma's home, and grandma can downsize, and perhaps grandma, rather than paying full tote odds on stamp duty, in actual fact pays a concessional duty. And the way I see that is that may create, so Tony Viner downsizes, one of his grandchildren buys the property, granddaughter gets a first home buyer grant to assist with that. But Tony Viner then, when he buys, may have a surplus of funds because he's going to downsize, so therefore perhaps buying a cheaper property. The surplus money he then has, together with the duty that he's saved with the concession, will then maybe take less pressure on the government pension system.
Yep.
And all of a sudden I've got some reserves there that I can utilise as a retired person. So it's a flow-on effect. It's not just it's not just impacting on one person. Surely that would be a more logical process.
I like it for a couple of reasons. Firstly, there's discussion about whether, tax incentives or certain types of stimulus packages go into economic spending, spending which drives the economy forward, whether that just goes into debt reduction. I think many people have reduced debt in recent times purely as they want to increase their buffer because they see a more uncertain world ahead. And that's a good plan, right? But if you're talking about potentially the grandparents being able to then downsize and keep surplus of cash, taking pressure off the welfare system, and potentially then they'd be able to spend that cash in the economy, that's a good call. I like that. I think we definitely need more state and federal cooperation on these things, because what you've got there is a stamp duty, state tax, trying to create a better outcome for a federal government responsibility, which is welfare. And they never seem to work these things together. They're just all playing their same, the one little sandpit. And it would be better if they sort of look over the fence a bit and say, well, what are you doing and how can we work this together for the national benefit, not just the benefit of one state or the federal government. Because I like the idea, and this goes to many things, I think, policy where it's too limited because we're dealing with, different governments of different sizes.
And I think the fact is we're so focused, and don't get me wrong, but we're focused on the construction industry, but there's lots of other industries, and we're both classic examples. I mean, I'm in the champion-based settlements in conveyancing world. You're involved in the finance world. There's the insurance community. There's other businesses, be it home decorators, be it in So there's just a massive connection, not just the building industry, and it's not all about the building. And don't get me wrong, I'm not bashing what's going on, but I feel as though there needs to be some sort of benefit that it goes across the board when it comes to property as a whole, because property, it's a bit like our program. It's not about just real estate buying, established and selling homes. There's a whole gambit of topics that are associated with property, which means there's a whole gambit of industries associated with property. And I think that could go a step further. Not everybody is booming at the moment, even though WA is going very well. Yeah,
that's right. Look, there has always seems to be this go-to, like the playbook isn't very diverse for dealing with even normal economic circumstances, but certainly these really exceptional ones that we face. And it seems to be more construction, right? That's the playbook.
Yep.
Whether it's big roads built in New South Wales to drive, construction industries over there, or housing construction, particularly here, to drive and keep people employed. But for example, manufacturing, it's been diminished for many years.
Yep.
And now it would seem that has led to kind of the tide's gone out and we've been swimming naked with regards to many of the things that go into our supply chains that are now more difficult to get, or potentially they're going to be the subject of a trade war, so it's going to be more expensive or not available at all. And yet, if we had it being manufactured here in Australia, we wouldn't have that insecurity in our own supply chains. And so perhaps the housing and construction discussion should be built around, well, which industries do we think we should be better at? Which industries are we going to invest in? Where are they going to go? And let's make sure the housing clusters around those areas so that people can move there and be employed.
George, you made mention earlier on about the Chamber of Commerce and some of the announcements that you picked up yesterday. Would you like to extend on that as far as that?
Absolutely. I'll talk about the Perth news first. So, so apparently, what we're seeing in Perth is driven by immigration.
Yes.
And I'm surprised because I'm not fully clear on how it works with international people coming in to Australia, but whether they're expats or whether they're people who got in before the hard border was established, I'm not sure. But there were 9,000 people, and I'm trying to just remember my statistics here, but I think it was somewhere between January and June, 9,000 people who entered Perth who weren't there before. Right now, it doesn't sound like a large number in the city of millions, but 9,000 people is putting pressure on the market because they weren't there before. So all these people are looking to either buy or rent. And in addition to that, then we also have, I think these are related, investment in the mining sector has increased for the first time in a very long time. Up here, all major miners are doing sustaining capital works. What that means is they look at their existing infrastructure and they're working on it to improve it to make sure that it operates for longer, more smoothly. So, for example, what we see up here a lot with Rio Tinto is they're looking at their hundreds of kilometres of rail line and they're saying, well, that particular bank there, we often see, too much wear on the rail track. We're having to replace the rail track too often. So what we need to do is build the bank up more so there's less vibration. I'm not really sure. I'm not an engineer, but basically they're taking like whole sections of rail, completely removing them, putting them back in, ballast and all that sort of stuff. That's in addition to Podiatry, which is like a new mine. South Flank, which is almost finished. That's a new mine. Eliwana from FMG, which is a new mine. There's also Iron Bridge, which is just starting. So that's a magnetite project with FMG as well. And all of these things mean that there's lots of capital works going on up here at the moment. And it's sucking up all the employees. Now, we can't get people here from over east anymore. But my understanding is that many of these large companies have given people choices from over east early on, particularly Woodside. Move to WA or you don't have a job. And so in addition to this international migration, I think there is a lot of resource sector people previously from the east who are now in Perth or in Karratha, most likely Perth. And so basically this is good, right? I think it's good because I don't think these policies are going to be retracted even when the borders open. My impression is that these big companies are constantly doing risk assessments of their industry, of their operating environment, and something which they may not have factored in heavily enough in the past was the risk of a pandemic on ongoing operations. And definitely what I want to do is make sure that if there is another pandemic or a repeat, cycling of COVID around the world, they can operate still, even when WA gets shut down, or even when the Pilbara indeed gets shut down. They want to make sure that they've got the workers where they need them. So I think, hopefully it's not a transient thing. Hopefully it's something that involves a permanent, re-establishment of more population in Perth. because I think the housing market is really loving it after so many years in the doldrums.
Yeah, and it's interesting. It is that, but at this point in time, the values are still sort of being steady. But of course, that's going to change. That is definitely going to change. And there's been some interesting statistics with that, which we'll certainly address that when Oscar's back on board with regard to that information. But it's been intriguing, mate. The other thing that I was going to ask you while we've got you is that obviously people are considering and need to reconsider their position as far as the mortgage pausing is now sort of phasing out, and already. I'm aware that the banks have been in contact with their clients who have got their repayments on hold, etc. I know in some cases where they're giving you the option to convert your loan to an interest only, or what you can do and what you can't do. The budget is about to come out. The federal budget is about to come out. Surely this would be a time for people to consider, if they haven't already done so, to review their position and become aware of doing a household budget.
Absolutely. A household budget is the most basic discipline I think you can have. And particularly if you can start it young, you get to a point where you get good enough that you don't necessarily need to write it down even. You just know, you have a feel for what you can spend keeping within your income. And the whole point of a budget is don't spend more than you earn. And ideally spend a lot less than you earn so you can save a significant portion. And the earlier you start with this, and in fact, because when you think about it, when you're very young and you're just trying to get yourself established, the situation's tight. You don't earn as much. Things still cost as much. So you have to work particularly hard with your budget. Now, if you have that discipline when you're young, it carries through. You've got to practice it and practice and practice it, write it down, track it every week. And if you do that for a couple of years, you'll find that it's built in, and it becomes easier to do even just in your own head. So the importance of a household budget right now, I think, definitely very important. Too often, I think people look to I'm going to borrow this phrase. It's not my own, but I love it. They look to rearrange the deck chairs on the Titanic. So they come and they want to restructure their finances. I've got a certain amount of debt. If I change banks, or if I do this and I get a different interest rate, a different repayment term, the problem is you still get the same amount of debt, and you haven't changed your spending habits. And if you're in trouble before, you might get in trouble again. What needs to happen is you need a good hard look at how much am I spending, am I earning, and what do I have that I really don't need. There are needs and there's wants. And of course, as you're, when you get into better situations and you can take on a few more luxuries and that's fantastic. Just don't get too attached to it, because, and look, the idea of a budget is you don't go into that territory where, you buy the boat, the camper trailer, the caravan, and then all of a sudden you have to have this grief because you got to sell it off because you can't afford to keep it anymore. If you're going to get those things, make sure you've got a budget that allows you to save money to buy it in cash, so you're not paying debt, and you might be faced with a situation where you have to sell it and deal with a really tough situation.
I think the classic, mate, we had Leah and Khan on, who are first home buyers, and in fact were clients of yours. And we had them on as our guests some probably quite a few episodes ago now. This is episode 24. So, and I know one of the things that really impressed me about the two of them was the fact that Leah sort of emphasised the importance of a budget and what they'd done to buy their first home. Now, they're only a very young couple, and it just goes to show the importance of it, and, of course, how it allowed them to do what they wanted to do. So it was a really interesting discussion, and to get that firsthand from a couple of young first home buyers was really important. And I think some of us oldies could learn a bit ourselves at times with regard to that sort of thing.
Yeah, look, I agree, because I think I mean, I will admit to at times forgetting the fundamentals, but I was able to get a start in my life because I had the fundamentals.
Yep.
It's important not to forget that, which we can do sometimes. If you're, I don't know, if you get overcome by wanting things, I want to go and get that, and I just will because I feel like it. That's the kind of, you need to sort of check that, go back and remember. I mean, look, a classic one I think is people are earning well. They're putting money away. They think, fantastic. I'm going to go and get a boat. I can afford it. And they get the boat, and they realise that with the boat, there's registration, insurance, mooring fees if it's in the water. You have to, there's fuel, maintenance. It doesn't come free. It's actually an augmenting of your minimum budget right there.
Yep.
It's not just the initial expenditure. It's that as well. So the best case scenario is to be in a position where you can afford it and pay for it in cash before you get there, rather than buying and then having to hustle your butt off just to make it happen, just to make it work.
Yeah. Oh no, I agree. I totally agree, mate. We're just about clocking up our time, and it's been an absolute pleasure having you on board again. And always enjoy your input, as I do. I might add, just as a sideline, we did catch up on your way through to the city, and you dropped off in Geraldton. We caught up together in Geraldton. I haven't knocked the top off that lovely bottle of red that you dropped off to me, but I'll have to keep that for next time you're in town. I think we might have to share that one. That looked a bit all right to me. But
fantastic. Yeah. Well, there might, it could be sooner than you think. I look forward to it. Such as the busyness right now, which I can't complain about. So that'd be great.
Yeah, no, that's great, mate. We always like to ask an if question, and OD's not about to ask the if question, but we always like to ask our guests as well. It's never too hard, but obviously travelling is what everyone's doing at the moment within our state. If you were travelling, what are the 3 places that you would choose to go to if you had a choice and you weren't so busy?
It'd be Exmouth. It'll be Margaret River, and it'll be Albany.
Yeah. Okay. Yeah. Righto. Exmouth is just it's gone ballistic. The number of people that I talk to, be it friends, clients, and others, that with regard to Exmouth, it's mind-boggling. And I was saying last week in Kalbarri, the bakery actually closed down. Not closed down permanently, or at least I'm not aware that it closed down permanently. But I believe they just were so exhausted. And, of course, again, can't get staff to help out.
Oh, wow.
And so they just shut down to have a rest. And I think perhaps being aware school holidays coming up, etc., they need a breather. But I've heard similar stories across the board. So
that's incredible. I mean, that's part of the Kalbarri experience, isn't it, going to the bakery?
Oh, yeah. I mean, well, in my opinion, most places, I mean, even Jurien Bay, I mean, you go there, the place is chockers. You can't, the pies there, the pies that they serve there when I'm travelling, I don't mind stopping off occasionally and grabbing the old curry pie or whatever. You can't do without a good bakery. Mate, it's been an absolute pleasure having you on board. I really appreciate you taking the time. I know with the kids and everything else, Saturday morning, they're probably, you must have locked them away, mate. They haven't come along and said hello this morning.
Well, I'm outside around the corner, and I think they haven't found me yet.
Jordan, thanks again. Been an absolute pleasure, mate. And I think if anybody, we're still working on, we're chipping away with converting to podcasting. So we'll certainly do some clips. But if you can get that link to us, we'll put that on our Facebook page on Property Avenue. But if anybody wants to ask some questions, you can still send them on our Facebook page and have a check it out. Mate, thanks again. I'll be in touch for sure, and we'll look forward to to having you on again at some stage, no doubt. And maybe we might have our co-host on board as well.
Wonderful. Sounds great. Thank you.
Okay, mate. Be back
Good
with
to
you.
see you too,
Cheers. To all those, that was Jordan Ralph from Mountway Finance. Fabulous, really good insight in a number of things associated with finance. We look forward to you coming on again, joining us next week. We do this every Saturday. Oscar's up in Kalbarri. We'll find out from him what's going on in Kalbarri next week. Please have a great week. Enjoy whatever you're doing. Those on school holidays, have fun. Kids, enjoy. Look after mum and dad. Those that are travelling, please stay safe. Join us next week, Property Avenue WA, your avenue to all things property. Take care. Thank you.